Hello friends, in this video we are going to solve the questions asked from the first lesson, that is Introduction to Partnership, in 2019 ISC question paper. So the first question was in question number 1, asked for 2 marks. The question was, list any 2 items which may appear on the credit side of a partner's fixed capital account. So it is important to note that the question mentions the fixed capital account method. Okay, so till now we have studied that capital account for a partnership firm is maintained under 2 methods. One is the fixed method and second is the fluctuating capital method. On the credit side of the capital accounts, the following items come: opening balance of capital, addition to capital, interest on capital, salaries, etc. So it is important to note that in the fixed capital method we have studied that 2 accounts are maintained, capital and current account, whereas under fluctuating method only capital account is maintained. So had this been a question of fluctuating capital account method, then any two of all these 4 items would have been correct. But in the question it is mentioned that we have to write as per the fixed capital method. So we have already studied that in the fixed capital method these 2 items form part of the capital account while the other adjustments form part of the current account. So this mistake is often done by the students, that they do not read the question properly and therefore mention these elements in the answer. So the correct answer to this question will be the items appearing on the credit side of the fixed capital account method will be opening balance of capital and any further addition to capital during the year. Okay, so the next question was asked for 4 marks. The question states that there are 3 partners, Peter, Max, and Som, sharing profits in the ratio of 4:2:1. Their fixed capital balances have been given in the question. Som was guaranteed a profit of 39,000 by the firm. It was decided that any loss arising because of this guarantee will be shared by Peter and Max equally. The trading profit of the firm has been given. We have to prepare the profit and loss appropriation account for the year 2017-18. So in this question, it is mentioned that one of the partner has been guaranteed a profit. It means that if on dividing the profits among the 3 partners, the profit comes to be less than 39,000, the difference will have to be contributed by the other 2 partners. So let us look at the solution. Okay, so for any account, it is very important to give an appropriate title to the account. In the exam, you will also have marks for the heading. So we are going to prepare the profit and loss appropriation account. We'll write the heading profit and loss account for the year 2017 to 2018. So first it is mentioned that 1,47,000 is the balance, is the net profit for the year. So by PL account, net profit is 1,47,000. Now first we'll divide this profit amongst all the three partners in the ratio that has been given in the question, that is 4:2:1. So to Peter's current account, to Max's current account, to Som's current account. So if we divide 1,47,000 in the defined ratio of 4:2:1, the balance is coming as 84,000 for Peter, 42,000 for Max, and 21,000 for Som. So it is mentioned that Som is guaranteed a total profit of 39,000 rupees. We've kept all these three figures in the inner column because after doing the adjustment, we will bring the final figure in the amounts column. So now we have a deficit of 18,000 in Som's profit share. So it is given in the question that the deficit will be shared among the two partners equally. That is, the deficit is 18,000. It will be shared equally as 9,000 and 9,000 between Peter and Max. So, so we are going to reduce 9,000 from Peter's share, 9,000 from Max's share, and we will add these two to Som's share, giving us a total profit of 39,000 for Som, 33,000 for Peter, and 75,000, 33,000 for Max and 75,000 for Peter. So with this, we have finished this question. Now, the next question was asked for 12 marks. In this question, it is mentioned that Ravi and Tiku are partners in a firm and their partnership deed defines that interest on capital will be allowed at 5% per annum, interest on drawings at 4%, a salary of 1,000 per month, and profit sharing ratio is 2:1. The opening balances have been given, the drawings figure has been given. Plus, it is also mentioned that Ravi had taken a loan of 10,000 from the firm on which interest of 200 was due by him to the firm. The profit for the year was 77,000 before taking into account any interest, partner's salary, and manager's salary of 18,000 rupees. We have to prepare the profit and loss appropriation account for the year 2017-18 and partner's capital account. So let us begin with the question. So we are going to prepare the profit and loss appropriation account for the year 2017 to 2018. So particulars, amount, particulars, amount. We will also prepare we leave some space and prepare the partner's capital account, particulars, Ravi, Tiku, particulars, Ravi and Tiku, credit and debit. Now let us begin with the question. First, it is given that the balances on 1st April 2017 was 60,000 for Ravi and 50,000 for Tiku. So, on 1st April 2017, by balance brought down is 60,000 for Ravi and 50,000 for Tiku. Then, on 1st June 2017, Ravi had made a drawings of 3,000 rupees. So, two drawings 3,000 for Ravi and 6,000 for Tiku. Next, we have been given the profit for the year as 77,000 rupees. But we all know that interest on loan and manager's salary are not an appropriation of profit, they are a charge against profit. So, ideally, these two components should have been debited to the PLL account itself, but in the question, it has not been adjusted and we have to adjust it over here. So, many a times, students make this mistake of showing these as an appropriation of profit, that is, in PL appropriation account, they show it as to interest on loan or to manager's salary, which is actually incorrect. We are going to adjust it with the net profit itself. So, by PL account, the net profit of 77,000 rupees, we are going to keep it in the inner column itself because we are going to bring the final net profit to the outer column after we adjust the manager's salary and interest on loan. So, the manager's salary is given as 18,000 rupees and interest on loan is given as 200 rupees. Now, the interest on loan is a charge against profit, but it is debited to the partner's capital account itself. So, we are going to make the counter entry for this in Ravi's capital account. So, to interest on loan account 200 for Ravi. Next, we have interest on capital will be allowed at the rate of 5% per annum. So, 31st March 18, by interest on capital account, we are going to calculate as 5% of 50,000 rupees, giving us 5% of 60,000, giving us 3,000 for Ravi, and 5% for 50,000, giving us 2,500 for Tiku. Similarly, we are going to make the entries in PNL appropriation account as well. So, to interest on capital, Ravi is 3,000 rupees and Tiku is 2,500 rupees. giving us a total of 5500 rupees. Next, it is given that interest on drawings is charged at 4% per annum. So, to interest on drawings. Now here, the drawings have been made on 1st June 2017. So, interest will be provided only for 10 months, that is from June to March, and not for the entire year. So, the interest on drawings will be calculated for Ravi as 3000 into 4% into 10 by 12, giving us 100 rupees, and for Tiku it will be 6000 into 4% into 10 by 12, giving us 200. We are going to do these entries in the PLL appropriation account as well. So we have by interest on drawings, Ravi is 100 rupees and Tiku is 200, giving us a total of 300. Next, each partner will be given a salary of 1000 per month. So the entry will be PL appropriation account debit to partner's salary account. So Ravi is 12,000 and Tiku is also 12,000. So giving us 24,000 rupees. Similarly, we'll do the entry in the profit and loss in the partner's capital account as well. The entry will be salary account debit to partner's capital. So by salary account in Ravi it will be 12,000 and for Tiku 12,000. Next we have the partners will share the profit in the ratio of 2:1. Now we have finished with all the adjustments. So we are going to balance the figures. Therefore, the adjusted profit for the year will be 77,000 minus 18,000 minus 200, giving us 59,200. So it will be 59,500. So two capital accounts, that is the share of profit for Ravi and for Tiku, the profit sharing ratio is 2:1 and the balancing figure is 30,000. So it will be divided as 20,000 for Ravi and 10,000 for Tiku. We'll prepare a working note for this. So the total profit is 30,000 rupees. Ravi's share will be 30,000 into 2 by 3, giving us 20,000, and Tiku's share is 30,000 into 1 by 3, giving us 10,000. Now that we have balanced the profit and loss appropriation account and found out the profit for the year, we are going to do the counter entry in the capital account also. So, in the capital account, by profit and loss appropriation account, profit, it is 20,000 for Ravi, 10,000 for Tiku. So, the total comes as 95,000 and 74,500. So, two balance carried down for the year will be 91,700 Ravi and 68,300 Tiku. So, in this question, the few areas where students tend to make a mistake is first is the interest on drawings. You might forget to provide the proportionate interest and charge it for the whole year. So we have to be careful in this respect. The second was we have to remember that interest on loan and manager's salary, interest on loan and manager's salary are charged against profit and not an appropriation of profit. So it is important that we make the adjustment for same against the net profit and not show it as a part of the profit and loss appropriation account. I hope these three questions are clear to you. If you have any doubts, you can post them in the comment section below. Thank you.